Morning everybody, just having some breakfast and thought I'd record a quick video on a question I got about a Bitcoin ETF. For those of you who don't know, an ETF is what's called an exchange traded fund, and it's one of the things that created a really big gold rush for gold when pension funds could essentially have an easy way to invest in gold using a fund whereby somebody would create what's known as an exchange traded fund. They would back you would buy essentially units in that fund and they would be backed by gold, and there's different versions of it where you can have it backed by non-gold products, but I'm referring to in this point a Bitcoin backed ETF. So there's a couple of things that to be considered in terms of the Bitcoin ETF, whether it's good or bad. The first thing is whether it's good or bad, it will happen. Whether it happens in the US or abroad, I think already versions of it do exist, but everyone's waiting for a US Bitcoin ETF backed by Bitcoin. And the SEC are deliberating whether they're going to allow it, whether they're not going to allow it. But the fact of the matter is it will happen eventually because the demand from investors to invest in Bitcoin is there. And if the government or regulators don't allow it to happen, then they're driving people to use Bitcoin in a way that they can control it less. If you check some of my previous videos, I talked about a beginner's guide and everything you need to know before buying Bitcoin. And I talked about the importance of putting it on a hardware wallet as opposed to a Bitcoin bank. Well, an ETF is essentially not quite a Bitcoin bank because it can't engage in the process of creating more Bitcoin than exists like a bank can do. When you deposit your money at a bank, the bank can use that as collateral in order to create deposits. And in countries like the UK, they don't even need the collateral. They don't have any reserve requirements. Those are defaulted through debt-based money. But anyway, an ETF can't legally, by its fiduciary duty, create more Bitcoin than actually exists. So it's different from a Bitcoin bank. However, an ETF is inevitable because governments will want to prevent people controlling their own money, spending their own money, and having self-sovereignty, which is what Bitcoin delivers when you store it on a hardware wallet and own the private key. But the vast majority of the people in the world, and particularly the largest pools of money in the world, won't do that. They have, for example, the biggest pools of money in the world are things like endowment funds, where universities invest in the financial markets, or things like insurance pools, where all your insurance premiums are pooled together and invested in the financial markets. And one of the biggest ones is obviously the pension pots, where you contribute to your pension and then the pension fund manager will actually invest that in different financial products. And they've got very strong regulatory requirements in terms of the products that they can invest in. And at this stage, Bitcoin probably wouldn't qualify unless it's done through some kind of ETF, some kind of fund, some kind of regulated institution where it has regulatory oversight, which Bitcoin itself, designed as it is regulated by maths and code rather than a government or a regulator. But once you put it into a product like an ETF, then it obviously is a traditional financial product that operates how the terms of the ETF explain in the investment agreement. So it will have a few effects. The first effect is that pension funds, insurance funds, endowment funds, where most of the money is pooled together, the large pockets of money, is very patient money. So when someone's waiting to retire, typically they invest in stocks and bonds and various other asset classes and hold them for a very long time. So the first effect is that once there is a Bitcoin ETF backed by Bitcoin, there will be record levels of institutional money that is looking to invest in an uncorrelated asset class and invest in Bitcoin as almost a hedge, as an uncorrelated. As a pension fund manager or a fund manager, they have a fiduciary duty in order to operate a balanced portfolio and protect against certain situations, but they can only invest in certain products. So many pension funds, they're not like hedge funds where you can short sell in order to diversify or protect against downswings. They're not allowed to short sell. So therefore, investing in an uncorrelated asset class like Bitcoin will probably become a responsible fund manager's fiduciary duty, which is why people like JP Morgan and Warren Buffett and many other people that have vested interest in the traditional system, call it a fraud, call it rat poison, and all sorts of stuff. When you follow the money, just look at their holdings. They have big, strong interest in Wells Fargo, Goldman Sachs. They might have bailed out during the last financial crisis. And so you get many of the traditional players that are really pushing back. And now you've got people like Donald Trump, who's starting to get scared of Bitcoin and tweet about it. This is a sign. Anyway, they know the ETF is coming. So the first effect will be that there'll be a big institutional demand, would be my forecast. We've already seen certain trust products which allows you to invest in Bitcoin through your pension. I personally, when I was working in investment banking, I left in about 2006, but I had a pension left over and I could reallocate that. And there was a product that allowed me to put that into Bitcoin. So I put that via a fund into Bitcoin, which is a really dumb, stupid way of holding Bitcoin, but it's the way that everyone would choose because most people are inherently lazy and they obviously don't want to take care of their private security, and they prefer the model of outsourcing the allocation of their assets because they're busy with other things. It's not just laziness, it's that it's not their top priority. Investing is something that they do on the side, but their career is what's their main focus or whatever they're passionate about. Tangents, keep getting tangents. Let's get back to the topic. So the ETF will essentially suck out a lot of Bitcoin from the supply because it's patient money, and institutions will be looking to invest in a non-correlated asset class. And the way they're going to do that in a regulated environment is through an ETF. So essentially it will create a shortage of Bitcoin whereby the higher the demand for the ETF, the less Bitcoin will be in circulation for people that want to own their own money, spend their own money. And that will have a contraction not on the exact supply, but the circulating supply of Bitcoin, which means that the only way to get those Bitcoin is to pay a higher and higher price, because there's a fixed supply and the economics of Bitcoin are unchangeable. So that's why it has many of the properties of sound money are world's best shot at achieving sound money. And what I call, I think I came up with the phrase first, a speculative store of value, which is people are speculating on whether it will become a store of value, which is where the opportunity lies, and it creates an uncorrelated asset class. So that would be the first effect, a contraction in the supply of circulating Bitcoins into a more patient form of money, which is the large pockets of money. And, everyone, governments and regulators know that that's a big problem, because the effect that will have on price, and then it will drive a lot of retail demand as they see the price go up and it reaches new highs. The second challenge with that is that there's going to be a counter effect and a counter force. And that is that more and more people will get lazy and they won't get the benefits of, excuse me, they won't get the true benefits of, God, wish I had a water now. They won't get the true benefits of actually owning Bitcoin the way it was designed to be, but there is a counter force to that as well. So when most people hold Bitcoin in a large centralized pocket via a third party, like Fidelity or Coinbase or many other of the Bitcoin banks, as it were, then what tends to happen is as the value increases, as the value of your investment increases, you get more and more friction in terms of trying to withdraw that because of regulatory requirements, anti-money laundering requirements, and all the other rules and regulations that these large institutions have to adhere to. And what that does is it decreases the user experience of money and drives people towards wanting to actually own their own crypto eventually. And so really, this is kind of the path that most people will go through. They'll go through engaging in it through some kind of centralized institution. That turns it into patience, that contracts the circulating supply. And then as it becomes worth more, people, again, none of this is financial advice. None of this could happen. I could be a deluded idiot. You could lose all your money. Please don't listen to me. You have to do your own research, and don't take this as financial advice. But one of the effects you could see is a big contraction, as we talked about. And then as the value of their Bitcoin ETF increases and more retail people engage, they'll start to see the price of Bitcoin versus their traditional assets and this uncorrelated asset class. And as it becomes worth more, they'll get more and more friction when they try to withdraw out of that product. And I think it's going to drive more and more people towards wanting to hold it on their own hardware wallet and use Bitcoin the way it was originally designed to be. But it is a concern of me that when we do get this Bitcoin ETF, we're going to centralize storage of a lot of Bitcoin. Now, that could have a couple of effects. One, I don't think it will be happen because the type of institutions that will get authorized to do an ETF must have an extremely robust security process. And institutions like Fidelity over hundreds of years have a lot to lose. You know, the Bitcoin ETF will be big for them, but they have a lot to lose if they ever get hacked and lose it. And the processes of, storing Bitcoin have become a lot more robust and understood over the years. So, but there is a risk that one of those centralized pockets of Bitcoin could either be attacked by a government where they could be seized, and that one would take out a huge supply, but initially cause a lot of fear. And also that they could be hacked and lose that money. But I guess in the ruthless way that Bitcoin works, you can't change the economics, you can't reverse it, you can't do what people did with Ethereum, where when there was a DAO fund that owned a lot of the Ethereum and they got hacked, they reversed the chain. You can't do that with Bitcoin. So what it does is it contracts the supply and has a ruthless positive effect to everyone that wasn't involved in the hack. And that's one of the reasons why you should, be aiming, if you're going to own Bitcoin, to hold it on your own hardware wallet and get the true benefits of being able to own your own money, spend your own money, and benefiting from the fixed money supply that over time decreases as more and more people lose their Bitcoin or these hack events happen. The economics of Bitcoin are ruthless. No one can control it. But it is what it is, and our world's best shot at achieving sound money. So, end result, is ETF good or bad for Bitcoin? Well, if you own your own Bitcoin, it's likely to have a good effect for you. If you buy into the ETF, then maybe if that was the only way you were going to get in, then it might get you into the Bitcoin ecosystem, but your job is to educate yourself and get over to a hardware wallet, exit the ETF when you can and you're comfortable and you've taken care of your personal security, but it's going to drive a lot of adoption and it's going to have a massive contraction on the money supply as more of these institutional pockets, which will have both a positive and negative effect. Positive because it would be a contraction of the money supply, of the Bitcoin supply, into patient money, and negative because there will be centralized large pockets of Bitcoin being stored under the control of a couple of centralized institutions, depending on whoever wins that, which means that they can either be seized, hacked, or attacked. But then whatever happens with that, as long as you're in your own hardware wallet, it could lead to a big contraction of the money supply, because what tends to happen during Bitcoin hacks, for example, look at the Bitfinex hack, the coins just sit there because it's very hard to exit, because in order to exit, you have to convert to a fiat currency. And when you convert to a fiat currency, these exchanges are required to collect people's data, know their customers, and all of the financial action task force rules that are coming through, which makes it harder to exit Bitcoin for a traditional fiat currency. And then money launderers will have to use the exact way that they do money laundering, which is cooperation with the largest banks at the central bank level, which is how the largest chunks of money laundering actually happen in this world, as opposed to through Bitcoin. So that's exactly some of the things that I'm forecasting, whether it's good, whether it's bad. I think overall it will be net positive. But one thing that's guaranteed is that there's going to be lots of change. You're going to have to adjust to this change. The ETF will certainly happen. It's a question of when and you don't want to be one of those people trying to get into Bitcoin when the ETF launches. You probably want to prepare and think ahead. It does change things, it does affect things, it can't be ignored, but who cares? Certainly Bitcoin doesn't. So over and out, have a good weekend, and I'm going to go get some breakfast and get back to work.